The new E, the new attitude. Brought to you by Mercedes-Benz.
The entirety of the Klang Valley will enter into Phase 2 of the National Recovery Plan starting from this Friday, according to PM Datuk Seri Ismail Sabri Yaakob. With this, Ismail Sabri says that travel between these states and districts will be allowed, with police roadblocks instructed to be removed. This is because, according to the PM, Selangor, Kuala Lumpur and Putrajaya are combined and considered as one same area of infection. Ismail Sabri also announced that individuals who have completed their COVID-19 vaccinations will be allowed to travel cross-district, while fully vaccinated long-distance married couples are allowed to travel interstate. Fully vaccinated parents will also be allowed to cross state lines to meet their children. While dine-in is already allowed for those who have completed their vaccination, the government is also allowing tourism activities in the same state that involves accommodation in hotels and homestays. Additionally, the government has also agreed to allow certain sporting activities to reopen, including indoor sports activities, indoor commercial sports and recreation facilities for the fully vaccinated. The only exception to this are gyms. Use of these facilities must be done by appointment in addition to compliance with COVID-19 SOPs. AirAsia Group's net loss narrowed to 580 million in the second quarter from the 992.9 million posted in the previous year. Revenue for the quarter jumped 161% year-on-year to 370.6 million, driven by better cargo revenue. AirAsia said that the group continued with its cost containment measures, including the right-sizing of manpower and salary cuts from management, staff and directors, while actively managing its capacity to suit demand. For the first half, AirAsia recorded a net loss of 1.35 billion compared with a net profit of 1.8 billion noted in last year's corresponding period. 6-month revenue fell 72.4% to 686.8 million. To preserve cash, AirAsia said it is in negotiations with lessors to restructure lease terms and has to date successfully secured some restructured leases in the third quarter. Going forward, AirAsia expects to see improved stability in its operations as vaccinations continue to be rolled out in phases across all key markets, coupled with better education and testing, alongside strong support for leisure travel bubbles and the push for global digital health passports. The group said its digital businesses have transformed remarkably and that it's encouraged by the early signs it sees and expects its digital revenues to contribute around 50% to the group in 5 years. YTL Corp's net loss widened for the fourth quarter to 408.5 million from 251.6 million previously, mostly due to a 595 million deferred tax booked during the quarter. However, quarterly revenue improved 23.4% to 4.37 billion from 3.54 billion, as almost all of its segments did better. It declared a dividend of 2.5 cents per share after missing a payout in FY20. For FY21, the same deferred tax led to YTL's full-year net loss widening to 368.7 million from 189.2 million previously. Revenue for the year declined 9.5% to 17.36 billion on weaker hotels and property investment divisions contributions. Executive Chairman Tan Sri Francis Yeo Sok Peng said in a statement that the group continued to see good results, with its utilities division being bolstered by the ongoing turnaround of the merchant multi-utilities business in Singapore. He adds that its cement division also turned in a strong performance on the back of disposal of cement operations in China, coupled with the increase in selling prices and volumes and lower finance costs. Yeo says the group is optimistic that the solid performance from its key operating subsidiaries for the 12 months under review bodes well for the year ahead. Lembaga Tabung Haji reported a slight drop of 2.2% in net profit to 1.22 billion for the first 6 months of 2021 versus the 1.25 billion posted for the same period in 2020. In a statement, LTH said that the lower profit was partly due to property investments as the property market was significantly affected by the global pandemic. Total income for the first half reduced slightly to 1.52 billion from 1.55 billion previously. LTH says the bulk of its income was derived from its fixed fixed income investments that contributed 942.6 million or 62% of total income. However, the Pilgrims Fund said its financial position remains strong, with assets totaling 85.92 billion, exceeding liabilities of 83.7 billion for the same period. Operating expense was flat, mainly due to prudent cost management amid challenging economic conditions, and the fund taking continuous measures to optimize expenditure to ensure its cost is managed efficiently. As of June 30th, 2021, total deposits amounted to 81.14 billion, its highest since LTH was established 58 years ago. According to the fund, the resilience of the results reflected a cautious and opportunistic investment approach, with robust liquidity management steered by its strategic asset allocation to minimize the impact of short-term fluctuations in the market. Glove Corp came out to clarify that it does not have any links or relationship with Glove's investment. TGI was previously flagged as a possible clone of the glove manufacturing group by the Securities Commission. In a notice on its website, Glove says it also does not have any link to any investment program or trading platform for investments. On September 4th, the SC issued a statement to warn investors of TGI as the company is carrying on regulated activity of fund management without a license, and that it misrepresented and misused the SC's name. TGI claims on its website that it operates under Glove Sdn Bhd, which is seen as a possible clone of a legitimate entity of Gloves with the same name. TGI claims that the potential clone Glove Sdn Bhd is licensed by the SC as a digital investment management company.
This program was brought to you by Mercedes-Benz.